if you go back a year over year, which is what the Fed's PCE report, the Fed deflator, it does a full year, right? So we're at 2.8%. But that's taken stuff from all the way back, like new leases in December of 2023.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from La Quinta. I am here for the California Mortgage Banker Association's end of the year board of directors meeting, and I'm going to sneak up on them. They literally have no idea I'm coming in here. Got a lot to talk about. It's Jobs Week. I'm going to talk about TOPS, trillions of operations per second. That is a measurement for like autonomous vehicles. By the way, one of the baddest ass CEOs of any organization is Susan Milazzo. She's awesome, and Suzanne Livingston is here as well. And you're on LinkedIn.
Oh my God!
You're on my LinkedIn video.
Oh yeah!
Yes.
Hi everybody.
Hi.
Hanging out with KP.
Susan is the best. All right. Here we go. Hey, everybody. Hey, California VA. Everyone say hi. Let's go. And our awesome CEO, Susan Milazzo. All right. Get your leaders tomorrow. All right. Cheers. I was totally impromptu, swear to God. Okay, Jobs Week. JOLTS come out tomorrow. Job opening labor turnover report. It's kind of a big deal. How many job openings are there? How many people are in the workforce? What is the quit ratio? People aren't quitting as much because when they do, or if they are let go, they are not finding a job to the tune of 1.9 million. By the way, this resort is super nice, especially during the holiday season. So if you want to check it out, stick with me. I apologize. I'm way overdue for a cut and color. All right, here we go. That is, God, my phone sucks. And it's the best camera on the market. Anyway, look at this. It's just gorgeous here. I'll get to that tree. Okay, so we also have ADP report, Bureau of Labor Statistics, BLS jobs report Friday. That is typically the first Friday of the month, December, for the prior month, November jobs report. There's anticipated to be 200,000 jobs created. Remember last month there was only 12,000. Of course, we had some hurricane issues, right? Will it be a rebound or will there be more weakness? Speaking of weakness, because of hurricanes, the new home sales was down significantly because those hurricanes really impacted the South, and that's where a lot of home building is being done right now. So new home sales had one of its worst months ever. Okay, this is that tree. Who won?
Broncos.
Broncos won. Bo Nix, what a beast. Look at this. Okay, so that big blurry thing I was showing you actually has color. But I'm doing I'm doing the reverse camera, not the forward camera. So anyway. So Samsung better than Apple. So what else is coming out? We saw a little bit sluggish data, not just on the new sales, but we saw a little bit of a rebound in manufacturing this morning, and that's a big deal. Will that continue to uptick? The Trump campaign made a lot of promises about bringing manufacturing back to America, so we're going to watch that. Obviously, it's good for jobs. GDP came out, our second of 3 readings for the third quarter GDP, and it was still 2.8%. But what's interesting, just a reminder in case you don't know, and I always find it fascinating, every time I read the report, there is a inflation report inside the GDP report, and it's a quarterly report, right? So remember, the Fed's preferred measure of inflation is the personal consumption expenditure, which we talked about, not too long ago. And there's a quarterly PCE read. The core was 2.1%. So in the quarter. Now, if you go back a year over year, which is what the Fed's PCE report, the Fed deflator, it does a full year, right? So we're at 2.8%. But that's taken stuff from all the way back, like new leases in December of 2023, right? Or, or November or whatever. And we know that rent has come down every single month, almost universally, in every single city. And so when you use a 12-month index, you're taking each monthly read and lining it up, and then once it's the new month, only then after 12 months, you finally fill out the oldest data and then replace it with the new data. So anyway, there's a lot of just data out there that kind of lags, but the Fed knows it. That's why I still think they're going to cut in December by 25 basis points. Watch the 2-year Treasury. Wherever it's at is where the Fed funds rate needs to be. They call that being at market rates. By the way, 10-year Treasury closed under 420 today. It's for all my Snoop Dogg fans. Bill Bodnar, I see you out there. Love your meme game. 419 today. So we went, since the Fed rate cut, we went pretty high. And then, of course, since the election, we went even higher on the 10-year Treasury. And then in like 4 trading sessions, and that's some of it was month-end positioning by bond traders and whatnot. But we saw the 10-year Treasury come down pretty significantly from like 444 down to 419 and 420. So we'll see if that continues, if there's any weakness in any of the economic data or any of the economic reports. We will see the 10-year Treasury come down, which is good for mortgage rates. The trend is your friend. I mean, the cards were shown earlier this year. The bond traders want to bring that yield down if the economy slows at all. We got down to what, 389 on 10-year. So anyway, okay. So let me talk about just a couple other things. Tariff talk. All right. Okay. Clear your mind. No emotional outrage. Use some EQ here. So the tariff talk from Trump himself has got a lot of media attention, and I don't know what media everyone listens to. I mean, literally the only thing that's even remotely TV that I watch are little sound bites from CNBC. Everything else I get are from stock analysts and subscription services that I pay for. So I feel like there's no fluff, there's no emotion. They're just trying to make money. What's really going to happen next year? Because it's important. The flow of money, the velocity of money. Are we going to grow? So for sure, President Trump is trying to carry a big stick and tell Mexico, Canada, and China, who are responsible literally for 40% of all of our imports, and say, hey, we're going to tariff you 25% day one, 100% on this, that. Like, I don't know what he's going to actually do, but if it does get favorable trading concessions for us, that's a win. I don't know where it's going to land. I'm not trying to defend him and his actions, but I love the fact that he's at least wielding the power that he has. But this is the part that I really enjoy, which I read over the weekend, if you haven't heard. BRICS, okay? Brazil, Russia, India, China, South Africa, okay? The BRICS nation. Then there's BRIC Plus, which has like Iran and Saudi Arabia and a couple of people. He is challenging them. And why wouldn't he? The BRICS nation is openly meeting and getting together, I guess to be like their own version of NATO or whatever, and have their own digital currency and undermine the US dollar. You understand? Look up BRICS, BRICS. Just look it up. Look what they're up to. I've been following this story for years. They are after us. They want to undermine the power of King Dollar. That's not good for us. So you know what? Over the weekend, Trump said, hey, BRICS nations, you want to undermine the dollar? You want to take away the dollar as the reserve currency of the world? You want to undermine our economy? Like, we're the good guys. We're the only ones that defend people when they're doing bad shit in the world. And we send first responders and resources, and our Navy patrols the world. Like, we are literally the police dog of the world. Not like Woodrow Wilson level, but certainly at a pretty high level. And they want to undermine that? Okay, I'm going to tariff you too. So, I mean, it's a good headline. It makes sense. I don't know what it's going to be, but I love the fact that we're actually challenging the BRICS, who are openly challenging us. And they're unifying together to undermine the US dollar. Do you guys want to have a bad dollar? Do you guys own anything? Anyone that's listening to me, do you own anything? Do you own property? Do you have savings? Do you have are you in the liquid stock market? Do you own gold? Gold's actually, BRICS are helping there. They're buying a lot of it. But the point is, they're trying to undermine our economy and our liquidity in our markets. And I love that he's actually saying something about it. And that's pretty good. So, but we'll see. Just hope it doesn't cause more inflation, which Hasn't been that big of a deal. Haven't had World War III yet. Haven't had inflation crush our economy. Things are actually pretty good. Look at the stock market, all-time highs today. Apple's ripping. Okay, NVIDIA. The reason why NVIDIA is so important, they have like a 2-year plus backlog of chips. Let's just talk about one use of the chip. We all talk about AI all the time. My favorite use of AI, I've been using it for years, is my autopilot and fully autonomous driving. And so the fact that the chips are getting stronger and better is really good. Oh, let's go! Chuck and Rosal, let's go! How are y'all? Good to see y'all. Done? There you go. It's my crew. Part of the board. So what's interesting is it takes chip and computing power for self-driving. Like I just showed my Tesla to my construction partner Jason's father on Saturday night before the Longhorns beat A&M 17-7, and the only way they scored was on a stupid pick six. So he's, his father's getting a little older and elderly parent. You would take away their freedom? I had to do it with my dad. My mom and my sister did, right? And I had to witness it. And so taking away the freedom of mobility, if you're an elderly parent, there is nothing like autonomous driving. I mean, it assists you. There are different levels to it, right? There's levels, 1 through 5. So let me just break it down real quick, and then I'll be done with this video in like 60 seconds. So, TOPS, T-O-P-S, trillions of operations per second. Like, think about that. 1 trillion operations per second that a semiconductor chip can do. Okay, so think level 3. Like your car can like drive you around, it can brake. It requires like you to like look at it, and then it can hand the driving controls back to you. Okay, that's where full self-driving is today with Tesla. Okay, that's about 100 TOPS. Okay, that requires chips. Which, by the way, Tesla makes their own chipset. If you know that or not. And there are a couple companies out there, but NVIDIA has like 55% of the autonomous driving chip market. Okay, so that's why NVIDIA continues to rip. It's a great investment. I'm not a financial advisor. I'm not responsible for your losses, only your profits. If you go to level 4 driving, which means like think Waymo in Phoenix or LA or San Francisco, Waymo cars are completely autonomous in a geo-fenced-in area, okay, certain location. The car can drive there. It's about 500 TOPS, okay? That's 500 trillion operations per second. Now, a completely fully autonomous car that can drive anywhere, anytime, not even have it mapped out, just kind of figure it out, look at that, oh my God, there's a deer, there's this, there's that. I'm gonna navigate through all this stuff. That's about 1,000 TOPS. So there's a lot more building to be done. There's some news has been made today in the media that the CHIPS Act money, right, which is to try and help out with our infrastructure and create foundries here in America. Some of that money is getting doled out, that hasn't been used yet before this year is up and the administration is, the Biden administration is out the door. And so I think it's a good thing. I really truly do. Like investing, creating a foundry here that's not in Taiwan, because like almost all semiconductor chips are made in Taiwan. To have it here would be amazing. It's kind of like a defensive move, honestly. So anyway, that's all. I can talk about Bitcoin, almost at 100,000. It's ripping. Doesn't matter. It's all good. Hope you had a wonderful Thanksgiving. I will be here and do another video Thursday from my boring ass desk in Corona. Have a great one. Cheers. Hey, it's KP coming to you live from Newport Beach. Well, it's Jobs Friday. It's a big deal. The Fed and everyone around the world is looking at our jobs and the health of our economy. And I'm going to get into that in just a second, talk about the trigger lead bill and the box office and a whole bunch of stuff here on a Friday morning. Just got done with The Last Word with Brian View and Christy Sukamet, put on by the Christmas Commentary. And about to run my national TPO sales meeting here for all of our account executives and correspondent wholesale. So I'm going to rush through this stuff. By the way, I'm really excited to announce the IMB Independent Mortgage Banker Show put on by the Mortgage Banker Association in Austin, Texas, January 27th through 29th. It is an incredible show, great content. I'm the co-chair together with Jason Stenger, Chief Operations Officer over at Movement Mortgage. And early bird registration ends on December 18th. So please, please, please sign up. We had over 650 people register plus whoever's suitcasing around out there. So register early. We're going to try and break that number. It's a phenomenal show. And we'll get the Mortgage Banker Association to promote the show a little bit more in this video. And really hope to see you there. It's at the JW Marriott Austin, which is just an amazing venue, cool town, right before this incredible year kicks off. So let's get dialed in, let's get locked in, let's get engaged, invest in yourself, and be there. It is one of the best shows in the business. It's IMB, MBA's annual, the Mortgage Innovator Conference over there put on by the California MBA, and of course the National Secondary that the MBA puts on. Great show. So see you in Austin. Hook 'em. Beat those Georgia dogs this weekend who wouldn't let our mascot Bevo on the stadium sideline, I guess because we took out a reporter and that damn dog, Ugga. Okay, so forecasting time, everything's coming out for next year. Existing home sales projected to be between 4 and 4.9 million units. That means people, even in older, lower rates, are going to come out, and they are going to come out. We're seeing it already this year. So we know they're going to come out next year. They're going to sell their home. 75% of people who sell a home buy another one. So as time goes on, equity builds. They put all that equity in the new house. And even with a little higher rate, which rates are coming down, we're seeing about a 415, 417 10-year treasury this morning, closed under 420, a very important 200-day moving average resistance level. We're hoping that we'll continue to see a healthy CPI report next week, and then we'll see the Fed meeting speak on December 18th. So big year next year. MBA's got some great forecasting and data, $2.1 trillion a year, $1.47 trillion purchase year. Let's go. Jobs, how does that impact it? We had a little bit of a beat, 226,000 jobs. One of the estimates was 219, one was 200. I think the median estimate was 219. So it's a beat, but the unemployment rate went up from 4.1 to 4.2%. Just like I've been saying, now that the election is over, we're going to start to see less of those birth-death ratios, modeling, people leaving the workforce, data coming in and out. That's been kind of skewing the numbers. The unemployment rate went up. Wage growth also went up to 0.4% month over month in the month of November, and that was supposed to be 0.3%. The Fed will look at that and see that as a potential sign of inflation. But if the inflation numbers doesn't happen, then it doesn't matter. So again, it's housing inflation, and then of course, homeowners insurance, car insurance. We saw stationery and magazines and newspapers go up last month, and the PCE, that's a one-off. That's going away. So inflation's looking pretty good. It's been coming down. Rates have been coming down. Yes, we saw a little spike since the Fed rate cut in September at 50 bips. Went up to about 444, and it's been coming down since then. Locks are good. Business is up. We've had, at PRMG, we had $800 million funded in November, which is higher than we funded in May and June, which is the peak right in the heart of spring purchase season. March is typically one of your best months of the year, so we're definitely looking forward to that. So hopefully everyone's ready for their forecasting and their numbers and everything else that's coming out for 2025. Okay, so what are the data that's out there that's important? The ADP number, which is white-collar jobs, did not impress. We're not creating enough jobs for population growth for people entering the workforce versus leaving. So even though you're seeing some headline numbers beat estimates, it's still below where it needs to be to have employment growing at a high clip, which is seen as kind of a win. It's seen as just basically stable. GDP, gross domestic product, which is 70% consumer spending in America. The second reading for Q3 stayed the same at 2.8%. And the Q4 initial reading came out from some data places at 3.3%. So we have a growing economy, pretty steady job growth, falling inflation, not rising inflation. And we've got some really high inflation comps for the months of January, February, and March that are going to come off. So even if we stay at 0.2 or 0.3, which is technically 0.27 or 0.22 or 0.24, it's going to replace numbers that were 0.3 and higher. So the February read of January, the March read of February, the April read of March, those big numbers will be replaced more than likely with those numbers I just stated, and inflation will continue to come down. So get ready. That means lower rates next year. Even Morgan Stanley came out this week. They thought the 10-year Treasury by the middle of 2025 would be 3.5%.
And if that 30-year fixed rate mortgage and 10-year treasury spread, which is a 220, continues to come down because of the stable economy, because the Fed is getting closer to their neutral rate, which they will tell us on December 18th, a Fed dot plot, their summary of economic projections. They're going to tell us where they think all these data points are going to lie next year, including how many more rate cuts after they do another 25 basis point rate cut in December. I really do think they are going to do that. So things are looking good. Moana, $220 million Thanksgiving weekend, record Moana 2. I've got 4 kids. Can't wait for it to come out on video. We did not venture off to the movie theaters. A $440 million box office weekend. Gladiator 2 was out there. There was Wicked, highest grossing Broadway debut by a movie. It's the consumers are out. They're spending. Black Friday, how did it go? Well, Thanksgiving Day was $6 billion in sales. Black Friday was $10 billion in sales. Cyber Monday was $13 billion in sales. I am not a financial advisor. I am not responsible for your losses, only your profits. But some of these beaten down retailers, they made some money. So their Q4 earnings should show that and reflect that. Of course, it's all about forward guidance, but some of them guided down going forward and got beat up here in Q3 earnings season. So they might get a little lift with some earnings beats and earnings surprises, which about 60% of the companies are beating on top line revenue, and about 70% of 70 to 80% of companies are beating on net revenue. So life's good. Enjoy it. Enjoy the weekend. Enjoy the holiday season. I'll get back to you next Friday. Have a good one. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.